on a daily chart, and as you can see, it's moved down reasonably firmly towards the 15,000 there. It has moved through the 15,000, but we can expect it to, try and get back to the 15,000 and sort of cling on there. However, the wave count suggests that there's further to the downside. If we do have the big if we do have the right wave count, then this wave 3 up here would see the wave 4 come into play towards the wave 4 of one lesser degree here, which would be to this one here, this minor degree wave 4 here, which is roughly down about the 14,500. So it's a fair way down if that's going to be correct. The other way of looking at things is the classic trading levels pattern, where we have the arrival, the reaction, the first high above the level, which is normally the fifth wave anyway. And then the distance that normally goes above, just roughly here, is normally the distance that goes below here. So just in terms of swing here. So that's kind of what we're looking at. Let's just see how we go. There's a couple of little hurdles that we need to get through, and I'll explain those. Looking at the 4-hour chart for this particular market. As it stands at the moment, you can see that we can count this down here as wave 1, wave 2 here, and then we've got this impulsing wave structure down through here. But this structure in through here, this could be counted as an A wave, a B wave, and a C wave that's not quite finished yet. But the C wave would be 5 waves in terms of the 1, the 2, the 3, the 4, and the 5, and that would complete here. I don't think that's the case because there's a bit of overlapping wave structure in this move down through here. I know that we can expect overlapping wave structure in the futures market and so forth, but even in the cash market, we've got this move down through here, and then we've got this move coming up through here. So if this was wave 1 here, then wave 2, wave 3, wave 4 here. Wave 4 is overlapping into the price territory of wave 1 here, which is a bit of a no-no. So it counts better that this is still impulsing to the downside in terms of down for wave 1, back for wave 2 of the next degree, smaller, and then the next degree smaller as well, down for 1 and back for 2 here as well. So it's still in its sort of early stages of waves 1 and 2s here, just smaller degrees unfolding through here, and this would be the same as the S&P 500. I don't have all the wave counts on here up to date because yesterday I just cleared all the old templates out because the storage was getting quite full on this platform, so I've just had to redo everything. So anyway, we'll get up to date on things. But this is the S&P 500 here, and I've just left oops, I got this wrong here. This should be the A wave here and the B wave here. But either way, the 1 or the A wave, the 2 and the B here, and the bias is towards this being a wave 2 here. And as I mentioned before, we can see here a little bit clearer on the 1-hour chart for the S&P 500. We can take this as down for 1 here, nice ABC correction back for 2. And this is what we were looking at before as well. And then we've got a nice 5-wave price action to the downside. We could call that wave 3, but this wave 4 here on the cash comes back and overlaps this price territory here. So it just sort of sends a message that this is like, if I just take the time here for a second just to put this as wave 1 here. Oops, a little bit small. Let's just might as well work on the job here. So this is we'll just make that a little bit larger there. That's default. So we can have that as wave 1 there and wave 2 here as such. And then this move down through here would be a smaller degree. So we'll go 1 degree smaller, which I'll just use this one here as wave 1 and this one here as wave 2 here. So this would be wave 3 unfolding to the downside here, but this is still not complete. If I go 1 degree smaller in working the wave structure to the downside, it would be this wave 1 here and wave 2 here and then wave 3 as it's unfolding here, but this is not finished yet as well, so it would finish in around here somewhere. So of course I need to make those smaller, but you know, you get the general idea that it's, if you understand Elliott at all, you can see that it's still unfolding to the downside. So you know, there's further to go from that point there. Alrighty, the European markets are the same as well. This is the FTSE here. I don't have the count on it on this particular chart, but we can count it in terms of down for wave 1 here and back for wave 2 here. So if we put in just some brackets here for this wave 1 here and wave 2 here, slightly different count to the US markets, because in this structure here we can see that we've got a little 5-wave structure down through here, so we could call that wave 1 for instance, and then we can look at wave 2 going back through to here as such, and then we could treat this is another 5 waves down to here in terms of 1, 2, 3, 4 and 5 into here. I thought there would have been more of a bounce here yesterday, so sorry about that. However, we did, you know, there is a bounce here as the wave 4. I shouldn't have missed that, but you know, I had a lot of computer problems yesterday, and you end up getting a bit stressed when things are not going right, and you're under pressure to do things. So that must be the English in me. So anyway, wave 5 coming down through here is not quite sort of complete yet, so that will come in through around here, and then we'll have the wave 3 here. So we've got further to move to the downside through here to go just yet. I'll just save that while I'm here. So we've still got, it should have been wave 3 there, sorry about that. But anyway, wave 3 should come in around here. Then wave 4 would pull back 38.2% of the length of the third wave to the downside. And then there would be wave 4 to the downside from that point there. And I did some work on it here, so this is just a 30-minute chart just to give us a cleaner view. So the 1 and the 2, this is important because the FTSE is important because the Australian market has a relationship to this as well. So, but the Australian market's leading, so we've got down for 1 and back for 2, the little 5 waves here that I mentioned for 1, 2, 3, 4, 5. Okay, we've got the extension through to here, so we're still looking for this third wave to finish down through here. So we've got 1, 2, and this would be the 1, 2, 3, 4, 5 to here. So there'd still be the 4 and the 5 to go from here. So expect a correction across the 6400 and then down to here. When we get down to here, we've got wave 3 here. The alternative count would be wave C, so an ABC to the downside. And that's plausible as well, and we'll work through that when we get there. But point being is that there's more downside, and that's the same with the DAX as well. You should have been short from the 8300 on the DAX. So the Australian market here, this is just the daily chart here. You know, if it's always the question if, isn't it? So, but look, the distance above here would be roughly the swing to the downside here. So that's what would be sort of looking for here. So the 4750 and the 4700 would be the next levels here. But, you know, we were looking for the 48 here. And we had a nice wave structure coming down through here in terms of down for 1 here, back for 2, and the third wave down through here, and the fourth wave to here. And then I kind of expected the 5th wave to be the same length as wave 1 here, because that's the textbook sort of thing, and you kind of go with the probability. However, the US markets have been extending out to the downside and have got further to go. So it's really sort of put pressure on this to move down further, which it certainly can move down further. So we're certainly under the influence of the US markets at this point in time. Yesterday's volume in the ASX 200 was selling volume to the downside, so that should flow there. So this just for day traders here, as the Dow Jones is going to try and grab hold of the 15,000 and the S&P 500 is going to try and grab hold of the 1600, then this market here is going to try and grab hold of the 4800. So the second point is that the the orange line here, the 772. So 72 normally carries a bit of weight and is useful, but when you've got 272 or 772, it carries even more weight. And you won't notice this in the beginning here, but it will play out as time goes on. So it's kind of important for day traders to be on the right side of this all the time. So, if I was going to short at the moment, well, then I would want that as a retested resistance. While it's support there, it's got the possibility of having some short covering back up to and sending the price back to 4,800 there. If it does go back to the 4,800 here, then it would be trapped within the supply of the group 1 here of 10, 20 and 30 here. So let me just have a little look at this here. There's still more downside to come here. The problem is any sort of short covering and any bounce off this here. So do check the US markets. Let me just have a check here. Find a chart here, the 15,000. This is 5-minute chart here. Just looking here for a second. So we can see a series of waves 1s and 2s here, a nice strong third wave here, and this is a fourth and a fifth and a fourth and a fifth. So it has a reasonable opportunity to stick to this, even though we expect it to go lower. So just keep the S&P 500 and the Dow in view of what you're doing through here as well, because the other side of the coin too is that the commodities are reasonably supportive as well, even though they've got a little bit more downside to come. And let's look at those. Let's look at those now, especially copper. Okay, the copper market here quite central to base metals, of course. What we're looking at through here is it's more like this rise up through here is in a nice 5 waves, even though it's a bit tricky to see. Now we can call that wave 1 or the A wave. So I believe the A wave would be more appropriate, and then the B wave over here. The B wave is in three waves: smaller A, B, and C here. So we can expect a move above this high here. So this count can also be played out another way. I could move that here and put the basically have the A wave to here, a B wave to here, and a C wave to here as a top here. So that can be a top in play there. Okay, so and this, because this C wave down through here it can be counted in 3 waves or 5 waves. It's just a bit rough either way. So we really need a break above the the 340 here to prove that to us that the trend up through here would see an equal trend up through here as such. And in that, what we're doing is we're just tracking very closely this wave count through here, and that's what we'll look at now. So we'll just take it step by step. But in the bigger picture, while this market is above the 330, we can expect that high to be taken out through here. So in just viewing that a bit closer here, this is the 2-hour chart here, and as I mentioned, I had to redo the chart. So this move down through here, we were looking at this in terms of an A and a B and a C through here. So if that's, and looking for this high to be taken out at the 340 here. Now we understood yesterday that that a market moving up to the number 8 here, a profit taking number, would be hit, and it has done so. But the wave count up here, if it's going to be a rally and going to fail and not make a new high here, then we'd be looking at this as an A and a B and a C wave up here, and the C wave with 5 waves in it, which is not fully developed yet, because the 5 waves up would be wave 1, wave 2, and then wave 3 needs to be longer than wave 1 here. So we can count this up as 1, 2, 3, 4, and 5 for wave 3. And at the moment we're looking at wave 4 here that pulls back to the wave 4 of 1 lesser degree. So we could say the 334 here. The 38.2 retracement level is a little bit higher, I think, at 336. But this move down through here, we'll look at this as an A wave, a B wave, and a C wave, and then as wave 4, and then a move up through here. So it could be the wave 5 up through here could be just take out that high, or it could even be lower. All it needs to do is be in 5 waves to complete it as a C, as a top, and then roll over from that point. Otherwise, if it continues to move up strongly, it's got a nice personality, then we'll treat it as a wave 3 to the upside, and looking for this to go higher through here. So there is positive, there's a positive resource sector as such. Right, and just drilling in here a little bit further, just while we're looking at this here, is that from this high here that we're looking at through here for wave 3 here is you can see that we've got 5 waves down through here. So if we've got 5 waves through here, then we should get some sort of counter trend back up into supply level somewhere, somewhere up in this area here. So that's the A wave, the B wave, and the C wave coming back down through here, and then up from that point there. So just bear that in mind if you're tracking the resources. So if we're looking at BHP, it's on the Australian BHP, you know that we've been tracking 5 waves up as an impulse wave, and then we've been looking for an A and a B and a C wave, and we've been short, we took a short trade from here. I knew it would gap, but I was expecting it to take lows out through here, and that seems to be the case as well. So it'll be interesting to see how far it comes down through here, but we can look to lock in more profit coming in through here. So just have a look at the volume on this today and the range of the price bar as well here as well. So anyway, that's that. The gold market. So as you know, this is just the daily chart here, and we've been looking for wave 4 high here, and that's coming to play at the medium level here, 1500, and then we've also been looking at this as a wave 4 here as well, and it's big and it's complicated and all the rest of it, and we're using the 1400 here as support or resistance, and let's have a look at that at the moment. So what we're looking for here is that we're looking for wave 4 on the 4-hour chart. We're looking for the A wave, the B wave, and the C wave for wave 4. And then we're looking at this as an impulse wave to the downside as wave 1, and wave 2 back up through here. And then we're also looking at this as down for wave 1 here as well through here. That's wave 1 here. And then we're also looking at this being wave 2 here. But there will be some sort of correlation in terms of the base metals and precious metals. But while the market is above the 1400 there, you can't short it. It's as simple as that, because it's got support there. Now, you'd go long on perhaps 1405 as a solid retested support. Safer still would be the 1410. A break of the 1410 would see you long at that point, just forgetting about this wave count that we've got, because you need to trade what you see. And what I mean by that is trading from a price point that has tested support. On the resistance side of things, if the 1400 became the resistance, sure, use the 1395 and then the 1390 and the 1380 to build a trade into the short side, because we'll be looking for a low to be taken out through here. So all I can see here, forgetting the Elliott thing here, is that I can see that, and you can see that we've got this like triangle pattern happening across here, or pennant sort of thing. So normally I find if the markets come from this direction and it has a corrective pattern across here, then it will move to the upside. So look to take any break to the upside here, and look to take any break to the downside here because of the Elliott count. So it definitely becomes a game of support and resistance, and how you handle the money. Start off small, and if the trend is going in your direction, just keep adding on the retests, be them long or be them short. The oil market as well. Where are we here? We're looking at the other thing supporting the commodity prices, of course, is the lower US dollar as well. For the commodities here, we're looking at this being an A and a B and a C here for the oil. And then we can see a little impulse wave up here. We had a target of the 61.8 retracement level of the last swing here. So look, it can fail from here, but if that was going to be the case, we'd want to see the 93 as a retested resistance, and even more so the 92 being all part of Group 1 there, if you understand that. To turn bullish, we would need that 95 to be the support there at that point there. But we're looking for one more swing low before we see a trend to the upside. So it'll be interesting to see if this market's got more in correlation with the US dollar or the indices. The other important point too, which I haven't checked, we had the ADP figures coming out last night in the US. Now, if they were whatever they were, that will be the lead-in for Friday's employment figures as well. So just check on those ADP private employment figures, because that will help us with the direction for Friday. Alrighty, let's have a look at FX. Okay, starting with the US dollar, it looks like we need to switch to the alternative wave count. It's not confirmed yet, but it's getting close to that point there. What we're originally looking for here is we're looking for an ABC correction to come back, and we're looking for that to come back to the 61.8% retracement level from this high here. As such, now I've got that upside down, so that's not that it's a big deal, but the 38.2 retracement here would bring it in at the 82.50 odd here, as that would be the 61.8 retracement level from that point there, and that's still sort of viable as such. Either way, we can still expect a little move down here further to complete that structure to the downside here. But we're looking now at this being an A wave here, a B wave here, and a C wave here, and this move here up for 1, 2, 3, 4, and 5 to make wave 1 up through here. So we're still bullish the US dollar. We just need to go through this ABC correction through here. We also need to be, the 61.8 retracement level for wave 2 here comes in around just above in between these two guys here. But that being said, then it's also likely that this number here, the 80, will draw this wave 2 a little bit deeper here. It'll either be shallow to this point here, or it's going to be deeper into the 80 here. So we'll know that as once this is fully developed through here as such here. But while this is going on through here, then obviously that's going to change a lot of the counts with the other crosses, so to speak. So here it is just on a smaller count here. So we're still expecting a move lower to break the 82.50 here, which would obviously send the euro to the upside as such. So with the euro here, this is just the daily chart here coming into the larger picture here. We're still looking for wave 2 as such. We thought that we may have it here in terms of an A and a B and a C for wave 2 here, but now we need to look at this as an A and a B and a C wave back up here for wave 2, which would bring us up around the 133.50 area through here. So that's what we're looking for there. Now, to confirm this, we need to see a move higher through here, because as it stands at the moment, we still need to consider this being down for 1 here, an A and a B and a C for 2 here, and it needs to fail at the 61.8 retracement level, which is at the 131 here basically. So, but drilling into here and looking at the US dollar, it does appear that this will move higher through here, but we need to get confirmation on that. So let's just drill in a bit closer through here. This is the just the 1 hour chart through here, and I'm just going to point out here, look, while the midpoint, the 130.50 has got support here and the 72 here, then we need to look for this to move to the upside. But just realize that this spike up here can be the wave 5 here, and that can be completed at that point, and it can roll over to the downside from here. So it will just depend on the US dollar as well. So with the US dollar index, the 50, the 82.50 as support or resistance is going to play a part in that. So if the 82.50 becomes a retested resistance, then you'll know to be long in this area through here. But even if we are long through here, it's likely that it's likely to to move up through to here and then basically get stuck in group 1 here to have some type of correction through here before we see any sort of further upside. But because of the baseline through here, it may only have a small corrective pattern across here before it moves up here further. So the idea is really just to hold long above the 1030.50 area through here, or wait for this to unfold through here and then look for a way in over here as well. But smaller position sizing at different prices is easily managed because you can always just be adding and subtracting if the trend is moving in your favour or not. So the Australian dollar as well, this is just the bigger picture here. Look, basically we're looking for 5 waves down in terms of minor wave 1 and minor wave 2. The minor wave 3 here is not complete as yet. We're still looking for 5 waves down from this last high here at 98, and it appears that we've only got wave 1 coming down so far. So wave 2, 3, 4, 5 to complete the wave 3 here. Then we'll have a wave 4 and a wave 5 bringing us down even lower through here. So as all trends, there's the beginning with the building, then the middle, the powerful part, and then the later part in here. So in looking at this here from that wave 4 here, yesterday we were looking for a bounce off 96 back to 97 such. That wasn't the case. Markets just fallen out of bed, so to speak. It's hit the midpoint, the 95 here, so there will be support here as well. But this is kind of what we're looking at through here. It doesn't always go according to plan, but sometimes it does, sometimes it doesn't. So it's always a little bit tricky. But I think the main thing here is to, it's not so much of a question of how far the bounce goes to the upside. It's more of a question of will it bounce, and if it does bounce, then we're looking for lower highs. So we'd be looking for, if we're looking at a bounce coming down through here, and then we'd look for a bounce back up as such. Once we got that first high there, it would come down and test again, lower again, and then it would test back up. And if that second high is lower, then you can take that one out through there and go low from that, go short from that point, and looking to add once the 95 becomes the retested resistance as well. So a move through here, probably just extenuating that a bit too far, but just to get the idea there, just sort of a set of retests here before moving lower through here as well. So just building in short positions, roughly at the right time technically, and then working with the closest, largest price point over here, but further to go down here. Alrighty, well, that's it as such. So so there's more, obviously there's more a larger bearish picture unfolding, and the idea is whatever you're trading is to be comfortably net short on your book. Alrighty, good morning, and thanks for listening.